Good evening, everyone, and welcome to the Daily Volatility Box Report for September 20th, 2019. We are TOSindicators.com, home of the Volatility Box. Once again, I apologize for no video yesterday. I was on a plane all day traveling to the East Coast, which is where I'm bringing you this video from. So we'll cover today's activity. It wasn't very pleasant, unfortunately. We ended up down for the day, negative 25.31, bringing our weekly total to 39.72.50 in profit. So still positive, but unfortunately today did kind of take out a good chunk of change from our week's profits. But that's all right. We had a total of 7 trades, and almost all of these set up around the same time when we had news of China come out and hit the markets. This ended up bringing all of the indices down lower, and the markets plummeted, and we, I think, breached even 3 standard deviation plus territory, which is kind of insane if you actually take a step back and you think about it in terms of probabilities. So while unfortunate and days like today happen, they're not very likely to happen, and so we can't really account or try and predict that days like today will happen or news events will drive price to be much lower. But we can still play the volatility box the rest of the week, which helps us end the week on a winning note. So we had 4 trades in all of the indice markets. All 4 of them were losers. We had 2 trades that set up in the bonds, and both of those were winners. And then we finally had 1 trade in the crude oil futures, which once again was a loser. And I'm on my Mac today, so I apologize for this weird brush tool that disappears and changes colors. The video on Monday will also be like this, and then no video on Tuesday when I fly back. But starting Wednesday, we should be back to normal. All right, so let's get into charts and let's take a look at what happened today. Okay, so we'll start with the bond futures, and we start with our usual test where we check to see whether or not we breached either side's aggressive volatility box entry lines. We see here that we very clearly had it, which was our sign to continue to use the aggressive volatility box. Our first entry to go long came right here as price fell into the volatility box, giving us an opportunity to get long. Our stop was outside of the volatility box, and we ended up hitting our first target in this candle and our second target, which was this dash target line in this candle. Now we're looking for our next opportunity to get short, and we had more than, I think, 15 minutes to have our orders ready to go. We were able to catch this short, which did end up giving us our T1 and our T2, but unfortunately not another entry to catch the rest of this move for the rest of the day. And so those were our 2 trades in the bonds for today. Now let's move on to the S&P futures, and we'll just talk about the S&P and quickly cycle through the charts once again. But the story was very similar across the board. So our entry to go long came as price started to fall, but unfortunately we were stopped out in the very next candle with our stop outside of the volatility box. We gave it 7.5 points of room, and this is about typical, and this happened across the board. So the S&P, the Dow, the Nasdaq, all of those trades ended up blowing right past. We'll cycle through the charts, and so if we see the Nasdaq, we see a very similar story here. Same thing on the Dow, and same thing on the Russell. The one thing I will point out that was sort of interesting is the Nasdaq was the only ticker out of the bunch that still ended up holding the conservative levels, which then gave us permission to try and see if we would get any entries off of the conservative volatility box towards the end of the day, which unfortunately we didn't. But as we see, the Nasdaq was contained inside of the conservative box, but the S&P broke far outside of it. The Dow broke outside of the volatility box, and so did the Russell. And this, I think, is just a sort of a testament to what today's move meant in terms of price action. It was definitely a 3 standard deviation plus move, something that no one could have predicted coming, but it didn't happen. But it did happen. It is part of our probabilities. It is baked into the model. We can't really say that, hey, a day like today is going to happen on a Friday, but hey, funky things do tend to happen on Fridays if you believe in that sort of thing. And that's really just the facts. And so we trade what we have. Today was not a great day in terms of profits, but the week we still ended up just fine. We ended up with a nice gain, and we'll take that, come back into the markets next week. We didn't lose any money this week, which is better, and so we'll come back refreshed. And let's take a look finally at the crude oil futures, and we'll make sure we're back on the aggressive box since that's what we were using on crude today. And once we get back to the aggressive box, we see that in that first hour, we ended up breaching the aggressive volatility box entry lines, but then we bounced from it. And that was our sign that gave us permission to continue to use the aggressive volatility box for entries. Our entry came as price fell into our conservative volatility box right here. Our stop was outside of the volatility box, which is unfortunately taken out before we ended up coming back up for around a break-even move into the end of the day. All right, so once again, today was a losing day, unfortunately, but we still ended the week up positive and positive almost 4 grand, which is awesome, especially considering that we had a $2,500 loss today. And that's really the premise of the volatility box. If you remember, our winning day was something upwards of almost 55, almost 6 grand 2 days ago. And so when we have our losers, they're far more contained, and when we have our winners far exceed our losers. That let us be able to deal with days like today without it completely ruining our accounts. So once again, as a reminder, no video on Tuesday. The video on Monday will be using the same sort of tools today, so you'll have the same weird drawing tool. But starting Wednesday, we'll be back in action, ready to go with our usual tools and ready to tackle the markets. We hope you all have a great weekend. We'll be out here in the East Coast, hopefully with some exciting updates in the coming few weeks for you all. But till then, take care, have a great weekend, take some time off, and celebrate the profits from this week.